Chapter 2, Lecture Note, Part 2, Video 3. In the last video, we discussed the trial balance. And we mentioned that revenue and expenses are on the trial balance there at the very last part. I highlighted in green some numbers and names. This is the income statement. It is the income statement. This is the income statement. Anytime we subtract revenue minus expenses to get net income, it's the income statement. So it's been really technically sitting here the whole time. Now keep in mind from an earlier video and from prior readings, there are we're going to learn about 3 required financial statements. If you want to say there's the basic ones, there's a 4th one, cash flow statement. We're only looking at 3. Income statement, balance sheet, and equity statement. Let's look at the income statement. Oh, by the way, look at the numbers. We got 12,000, 800, 2,500, and 5,000, right? Let's just go ahead and do the math. If revenue is 12,000, and these are the expenses, we'll subtract them out. Grab a calculator. Minus 800, minus 2,500, minus 5,000. Do you agree that net income, 12,000 minus these 3 expenses, is $3,700? Let's look at the income statement. It is. So revenue, or fees earned, that's what they're calling it in this company, minus those 3 expenses. Remember I told you 2,500, 800, 5,000. You can pause the video if you want and go look back. We get net income of $3,700. And remember, we have equity that changes over time, and it's made up of DIRE. Dividends, investment, additions to common stock. There's other types of common stock, but for right now, it's only common stock for us. Revenue and expenses. Well, we just combined and netted revenue and expenses, and now we have $3,700. That takes care of the income statement. Now, let's look at the statement of retained earnings. Retained earnings is like a savings account, if you want to look at it that way. It is not a savings account. It is not a savings account at all. But it's helpful to look at it as though it's a savings account. You have a beginning balance. This case is 0. We make deposits. And this, going with this analogy, is net income. We add $3,700 to retained earnings. And sometimes we need to withdraw money out of our savings account. In this case, $2,000, we call that dividends. So if you look at it from the savings account standpoint, retained earnings is 0 plus deposits, net income, $3,700 minus withdrawals, dividends, $2,000, gives us an ending retained earnings of $1,700. So by the time we finish this part of our financial statement, starting with the income statement first, then the retained earnings, we have D, and we have R and E out of DIRE. So we don't have the I, the investments. That looks like door now, doesn't it? Let's get rid of that. That's confusing. So we're missing the I. So how do we get that in there? On the balance sheet. Let me show you. So right now, on the balance sheet, retained earnings has dividends from the retained earnings statement. It has a combined net income when we take revenues minus expenses. So it has everything but the investment. Right? Where is the investment? Right here. So between these 2 lines, we have DIRE. So DRE is in 1,700 and the I is 3,000. Let's get back to business. Let's do some work. So going back to the trial balance, cash is 4,100, account receivable is 600, and supplies is 100. So for assets, we should also have that here: cash, accounts receivable, supplies, 100. That adds up to be 4,800. All right. So what we want is this. On the other side, the total of liabilities and equity to be 4,800. Getting a little crowded. Let me erase. Okay, so let's go back to the trial balance. Accounts payable and common stock, 100 and 300. 100 and 300, and then we put the, just like we talked about already, we put the 1700, we roll the 1700 ending balance from the statement of retained earnings into the balance sheet. 100 plus 300 plus 1700 is 4800. Let's go back and look at the income statement. Mouse wasn't playing nice. I'm sorry, the trial balance. Let's go back and look at the trial balance. Oops, too far. Let's clean it up. I want to show you something. So we're looking at the unadjusted trial balance, or what you will begin to call the unadjusted trial balance. Here's the balance sheet. It's been sitting there the whole time. I think I got carried away with, yeah. Let's do it this way. There we go. Yeah, there you go. That's the balance sheet. So that means what we've done is we've combined this section and put it in what's called retained earnings. Which is dividends and revenue and expenses. So the dividends, and then this is the income statement we talked about earlier, ends up in retained earnings. And here's your I for Dyer right there. And again, you can pause the video. Hopefully you printed out the solutions and you can flip back and forth. But let's look at it one more time. Here's your assets, the first three lines from the trial balance. They total up to be 4,800. Second two lines are accounts payable, which is the only liability, and common stock, which is 3,000. And that's equity, and retained earnings, which is 1,700. So it might be helpful to recall that assets equal liability plus equity. Total of our assets is 4,800. Our only liability in this particular company at this time is $100. And equity is 3,000 plus 4,700. So $100 and $4,700 is obviously 4,800. So they're equal. And our balance sheet is balanced. Last comment, and then we're done with this video. Date only there. So a balance sheet is like a snapshot, a picture of what the balance sheet is like on a particular day. And the particular day is the last day of March 31st. However, not so with the income statement and the statement of retained earnings. The statement of retained earnings it captures what happened to retained earnings during the month of March. So it begins with March 1 and ends with March 31st. So during the month, they started off with a zero balance. And we've discussed this form already, and it ended with 1,700. Same thing with the income statement. And during the month, 12,000 fees were earned, and then a total of these expenses were incurred, 8,300, resulting in net income for March of 3,700. So again, for the month ended, only do the date for balance sheets. If you want to get in the habit of doing for the month ended, great. But on the balance sheet, date, and it's a trial balance. We're staying consistent. If it says balance sheet, trial balance, doesn't matter. Date only. That's what it is. It's like pulling out your phone, taking a picture of your balances on that day, and that's what it is. Okay? This concludes the video. The last video, video 3 for Chapter 2, Lecture Notes, Part 2.